Hello friends, today's video is a general awareness video which can potentially save you lakhs of rupees. So that way we can call this a kind of financial planning too. This video is meant mainly for two types of people. The first is self-employed people who don't have an insurance already. By insurance I mean medical insurance. And the second category would be salaried employees who already have an insurance cover provided by their employers. Now confused about why the salaried employees need an insurance cover who are already covered? Let's discuss in the video. Welcome to RT's Tax Info. Before I'm getting into the video, let me talk about two types of insurance plans. If you already haven't heard about these plans, it's worth checking out. The first one is a critical illness insurance plan. Suppose you take a critical illness insurance plan for 10 lakh rupees. While taking the insurance, the insurer will give you a list of critical illnesses which are covered under this plan. Suppose cancer is one of them, and unfortunately you get detected with cancer. What happens is the insurer will give you 10 lakhs right away upon submission of a medical insurance and required documents. So you can use this 10 lakh rupees for your medical expenses, hospital visits, tests, and even for buying medicines. You don't have to be hospitalized for getting this 10 lakhs. The second type of insurance is maternity health insurance or pregnancy insurance. You all know that the delivery expenses these days are huge. It can cost anywhere between 1 to 3 lakhs depending on the city you are residing in. So if you pay the premium, it can be 10,000, 15,000, or even 20,000. But if you pay that and you satisfy all the conditions mentioned in the policy, your whole delivery expenses, the entire expenses, prenatal, postnatal, including checkup, delivery, cesarean or normal delivery costs, whatever it is, all these will get covered under this insurance. So these two kinds of insurance, if chosen properly, can be game changers. Now let's get into the topic of today's discussion. If you're a self-employed person and you don't have an insurance, I don't have to tell you that you have to get one right away. The medical inflation rate in India is around 14%. By medical inflation, what I mean is, suppose you spend 1 lakh rupees for availing a certain medical service this year in India. For getting the same service next year, you will have to pay 1 lakh 14,000 rupees. So when the medical costs keeps increasing every year, it is common sense to get an insurance right away. But if you are a salaried employee who already has an insurance cover provided by the employer, what is the logic in getting an extra insurance? The thing is that the insurance coverage provided by the employer ends when you retire. And 95% of the employers do not let you port from the existing group insurance coverage to a different insurer. Also, if they do let you port, what happens is the no claim bonus accumulated in your existing policy, it does not get transferred to the new policy when you port. But you can always argue that after retirement, you can go for a new insurance policy and avoid paying the extra insurance premium every year right away. There are three problems with this. The first problem is that beyond an age, say 58 or 60, that is the time you retire, majority of the insurance providers are not willing to give you an insurance policy fresh. The second thing is that even if they are willing to provide you with an insurance policy, the age-related issues like diabetes, cholesterol, etc., it's a pretty common thing among the Indian public now. So if you have such things, even if the insurer is willing to provide you with the insurance policy, the terms would not let them give you an insurance policy. And the third point is, suppose overcoming all this, you do get an insurance from some insurance provider. There is something called waiting period. It is generally 2 or 3 years. What this means is you will be insured only after 2 or 3 years from the time you start paying your first premium. So if some medical emergency happens in this 2 or 3 year period, you won't be covered. So the entire expenses will have to be borne by you. Something like this happened to a relative of mine. What happened was, when he was retiring, his employer let him port from the existing group medical insurance policy to a private insurer. But the concept of waiting period was not conveyed to him by the employer. What happened was, after retiring, I think about a year or so from after retirement, he had to have an operation. And after operation, when he was submitting his documents for the reimbursement claim, the claim was rejected, and he had to pay around 2 to 3 lakhs from his pocket. It was due to this waiting period concept. So after retirement, when you don't have a steady income or a regular income, a huge medical expense is a big problem. So to avoid all this, what could be done? So let's discuss about all that in the final section, which is the takeaway section. Takeaway one: if you're a self-employed person and you don't have an insurance, go get one right away. If you already have an insurance, please check that all the things that I was talking about is getting covered under your plan. If there is some extra rider to be added, please talk to your agent and make sure that you get the best possible coverage. Second, if you are an employee who already has an insurance provided by the employer, get an additional private policy and let the no claim bonus in that policy grow, and keep revising the slabs at regular intervals. By slabs, I mean the sum insured. When you're starting young, the premium you pay will be lesser. Please don't treat this as an expense. Consider this as an investment to make your post retirement life secure, so that in case of a medical emergency, you're covered. In case of a hospitalization during your employment period till the time of retirement, please do not disturb your additional private policy. Use the policy provided by your employer for all the expenses. This way, the no claim bonus in your additional private policy is not affected. And once you retire, you can continue with your additional private policy. I hope this video was of some use to you guys. Please go through the existing policy and if required, make some revisions or additions. And if you're a private employee who already has an insurance, please consider taking an additional private policy. I'll see you in the next video. Thank you.